Welcome back, everyone, to the Exchange Live. My name is Paul Hill, and I'm delighted again to be able to speak to accomplished investor and a stock trader, Michael Taylor of Shifting Shares. So welcome, Michael.
Hi, Paul. Thanks for having me on. How are you?
Yeah, not bad. I understand you're out in Germany there, just preparing for that big match at 8 o'clock in Berlin against
Yeah, need
Spain.
to find an Irish bar. Yeah.
Yeah. Well, we're all
Yeah.
got everything crossed at the moment. I think even Gareth Southgate. But anyway, we've had a massive amount of macroeconomic data over the past week, not least yesterday's better than expected US CPI print and UK GDP, which actually has pushed the sterling versus the dollar up to 129. But before we sort of run through your view of the markets going forward, I don't suppose you could just quickly remind the audience of what type of investor you are, what kind of stocks you like.
I'm not really, well, I'm not an investor, full stop.
That's a bit
I
honest.
look at, I look at fundamentals, but they're not the most important thing to me. I would rather buy a really good chart with what might look like poor fundamentals than a stock that's going down with really good fundamentals because I don't average down. I don't buy stage 4 downtrending stocks. Whereas I guess an investor would probably think the stock is now cheaper and then buy more. Which is fine. There's more than one way to do well in the market. So that's just my way.
And how that sort of trending strategy progressed so far this year? I mean, it's been an upward trend, hasn't it? So I guess you've probably done pretty well.
It's been a much easier year, yeah, because the thing is with when everything's uptrending, you get bailed out, you might make a few mistakes, but because the market's uptrending in general, if you're net long, then it's going to be much easier.
Yeah.
So yeah, it's a really nice market. It's early stage bull market. Um, and hopefully it continues for some time. It's not
Yeah.
guaranteed, but certainly the risk to reward on a lot of stocks now is quite attractive. Plus, you've got those technical movements, outflows from funds are starting to reduce. Sentiment is on the rise. Last year I think the Twitter activity was down quite a lot because stocks were down, attendance at events was down, and now it's really starting to turn around. It's a lot more positive.
So what do you reckon the year-end target's going to be then for the FTSE? We're at 8,250 at the moment. We started the year, just coming down the start, roughly around about what's it say there? About 7,500. So we're up a good sort of like 10% actually, 8, 9, 10%.
Well, if you look at all of the big banks, the really clever people with the big computers and big bankrolls, every time they predict where the S&P 500 will be, they're all massively wrong a lot of the time. So I'm not even going to try and make a prediction because I have no idea.
Right, but you say the trend is moving up, is it?
The trend is up, but that could change tomorrow. Who knows?
Yeah. Okay. All right. Okay. Well, if anybody would like to ask Michael questions, then please just put them into the chat bot, and I will read them out. We've had last couple of days really. Big news on Equals, which is a forex fintech platform in the UK. It came up to its put up and shut up deadline on Wednesday, and said beforehand that it received a non-conditional offer of 135 pence per share. I don't know whether you've ever had a look at this one at all, Michael, have you?
So it's one that I bought and sold very quickly, and I think it was around 30-40p, and I never got back into it because it's been quite choppy, and it's basically just been a one-way street up.
Yeah.
So it never really consolidated and let me get in, so I missed out on a nice trend. But from what I understand, a lot of smart people are in this. I think the put up or shut up has been going on since the dawn of time, which is getting a bit ridiculous. But yeah, I don't really have any view on this.
Yeah. Well, just for investors, I mean, it's actually my largest shareholding. I've been in for about sort of 4 years, and the board Exactly. The board has, as I say, has received this 135 offer from the the Rails and Towerbrook consortium. My thoughts on it is such that, I mean, Towerbrook have got a sort of like a reputation of playing hardball when it comes to price. They are at the moment the only party still left in the auction process, and therefore have obviously decided to try and get the business at a very good price, hence the 135. My fair value is 170. It's obviously 15%. Their indicated bid, or non-binding bid, is at 15% higher, but significant less than my fair value. And I know Ian, the CEO, and Richard, the CFO, really well, and I trust them 100%. So I'm really going to sort of follow their judgments in terms of what the best strategy is to do. And they have certainly been doing an absolute blinder, holding the business together through the disruption of the auction process for 8 months, and I think the sales grew 33% from that. So, I mean, all I would say with investors, I mean, I was actually playing a bit of like an agony aunt on the with telephone and Twitter. Some of the messages coming in on Wednesday from a lot of investors who are a bit disgruntled with the 35 price. But all I would say to them is that the management team have done a blinder in terms of running this business, and just let's just trust them, because they've done a great job in the past, and it's a matter of just holding faith. And I'm certainly going to sort of hold my position and see how it shakes out. And they got investors also who maybe feel a bit sort of like unhappy about the 135. They just need to put it into context such that the directors and the board have a fiscal duty to sound out in the shareholders, the big shareholder, the likes of Schroders.
I agree. Yeah,
is it Penmar and who was the other one? Schroders and Columbia Threadneedle Streets. They have a fiscal duty to do that, and by actually informing the shareholders, engaging their view, then the board will be sort of like run what their views are. So I think they've done a good job, and they continue to do a good job. So just for investors, I'm holding pat, and let's wait and see what happens. But anyway, it was just amazing because I got so much sort of inbound on Wednesday that I thought it was essential we covered this in that one. Okay, in the similar sort of sector, I know you quite like PCIPAL, which is basically a software platform that is expanding out into the States from its heartland in the UK, and it allows, I think, call center operatives to hide the credit card detail, for the credit card details to be hidden from those operatives when somebody wants to buy from online. And they've just put a big patent case, haven't they, against somebody? Because I think that's what you talked about.
Yeah.
Give us your latest view on this one and how you see it.
So yeah, this basically hides details and outsources PCI risk. So if you're not, you can either do it yourself and achieve that compliance and do it yourself, and if something goes wrong, you're on the hook, or you can hire a company like PCIPAL to do it all for you, and your business can focus on the core competencies. So it's like insurance software as well, and also it's one thing that you don't have to worry about or focus on. It's quite sticky. The customers tend to be quite sticky and increase, not by a huge amount, but revenues are growing. But essentially, this case was brought by Semaphone, which is now Securio. They got taken over by private equity, and management said they believe that this case was brought to disrupt PCIPAL's business. I would be inclined to agree. And it's also worked, because money that they raised in 2021 could have gone to more expansion, went towards this case. But it hasn't been a huge disruption. The company's still growing. But last week or the week before, there was a settlement. So that is now finished. The uncertainty is completely gone.
Did they say how much they were going to? Michael, did they say how much they were getting for that settlement?
We don't know. It's all confidential. So, I mean, the PCIPAL had won the UK leg. They won the appeal as well, and also weakened Securio's patents themselves. So they came out worse for it. And they raised money as well at a nil discount to the price, so more than ready to go to the US for the second half. But yeah, it's been settled, so who knows what came out of that? Maybe PCIPAL paid a concession. Who knows? But in any case, that uncertainty is now gone. The price is now moving into 2-year highs, and you can't compare the old price at 120 to now, because that was before rates shot up. So the cost of capital is now higher. It's a completely different environment. But also, Securio bid for this company at 90p after they tried to disrupt it. So if they're willing to pay 90p, which is 50% higher, what would somebody else be prepared to pay who wasn't actively trying to weaken the company's prospects?
Yeah, I would agree. I think the valuation, it still looks very attractive. They raised some money, didn't they, just recently? Was it 56p, 3.5 mil?
Yeah. I mean, I was supportive of that raise because the balance sheet was looking a bit weak. Management said they had enough to get through it, but my view was that if you raise a bit of money, less than 10% of shares in issue, you get some money in the bank. It just makes the balance sheet much stronger for not as much dilution.
Yeah.
And pleasingly, that's what they did. I'm not saying that they did it because I said so. That would be silly. But I imagine quite a few shareholders agreed. And I was really pleased with it. Yeah, because it removed that balance sheet weakness.
Yeah, I would agree. I think
helped settle the case, I would imagine.
Yeah, no, I'm with you. I think it looks a good, solid business, and having now got that the uncertainty of the basically that case out of the way, then it means it should be a continued moving up. And just on that valuation, I was looking, it trades about it trades at about 2.5 times revenues, and I know Echo, which is a similar sort of business in this area, trades at well over 3. In fact, I think it's closer to 4 times sales. So you're right, if it can get that expansion going in the US. Now, we do actually have one question for you coming in from Dave W here, Michael. Do you tend to follow UK stocks or hold US stocks, obviously for the trading side? What's your portfolio makeup?
For the UK. I will expand into the US at some point, but there's just so much opportunity in the UK. I know the UK market reasonably well. It's what I've been doing for the last 8 years. I know quite a few of the stocks, the main players, the infrastructure, the intricacies of the auction, things like that. So I would feel a bit disadvantaged going to the US, but there's a lot of opportunity in the US as well. So eventually, I will trade US stocks, but certainly at the meantime, I think there's not much need.
Yeah. Okay, well, we've had one question. I was just trying to get a stock chart up, but from which came up after an trading update, which was from Finseta, which basically does forex payments, a bit smaller than similar sort of setup as Equals. Its key differentiators are it's got a bigger service wrap for high net worth individuals and corporates. Service is more high net worth individuals, and is basically does less of the sort of like really sort of like the big currency pairs like the euro and the dollar, and does more sort of like the Canadian dollar and UAE and Singapore and stuff like that. Anyway, its gross margins are sort of 65% plus, which is industry leading. It came out with a half-year trading update. Sales are at 40%, and if you stripped out some discontinued business that were at 50%, they did a bit of a clean sweep. Margins up, profits up, EPS up. And the sort of the question is sort of where does it go from here? Because the share price has sort of tripled. I'll just try and get it on. Oh no, hang on. Let me just see if I can. Finseta, yeah, it doesn't seem to.
They got it wrong in the RNS, didn't they? They called it Finest. It's a bit confusing.
Oh, there it is. I got it. Okay, brilliant, fantastic. I managed to get this chart this time. Here we go. The shares have done brilliantly. They've tripled, and all I would say, I mean, unfortunately, I wish I owned these ones, because a lot of sensible investors have told me about it before. But I'm big into obviously Equals, so I didn't want to get too exposed to the sector. But their shares have tripled, and so the question is what do you do next? Well, I mean, I would suggest, and I don't own it, so I don't really sort of like, it's up to obviously every individual, but I would hold it, because the broker's got a price target of 70p on it, and it's winning market share, it's increasing margins and expanding abroad, adding new products like cards and into Canada. And I think it only trades, actually, I was just looking at it, it still trades at 1.8 times sales, so there's still plenty to go. But what do you think of the chart there, Michael?
Well, that looks to me like a stage to uptrend, so that would be something that I'm interested in. I actually got stopped out of this recently, but I'm going to look to get back in. Because I think that's a really nice chart. The market cap is only around 25 million, so it's quite small.
That's right.
Regarding the broker notes, I just ignore those because they're usually paid for. And of course, brokers are going to be long. That doesn't mean that there's no value in them. I'm absolutely not saying that. I personally find them quite useful to learn a bit more about the business, see what is baked into the stock regarding forecasts. But yeah, price targets. People have asked me before, do I look at those? And no, I don't. I just ignore them completely.
Okay.
Unless it's a house broker saying sell, in which case that's
Okay, good. We've got another question from Otman Salamat, and he wonders, Michael, whether you've ever traded Avacta, and if you have, they're basically a biotech business that are developing a big drug for sort of chemotherapy, AVA 6000. I don't know if you've ever look at this one. If you ever traded it, because the shares have actually popped up pretty strongly recently. They've had a new CEO. Who came in, Christina Coughlin, and I think they're sort of targeting a lot of the big US biotech investors.
Yeah, so I did trade this recently with the placing because I thought there would be quite a bit of retail demand afterwards, which was the case. But it's just way out of my league. I don't really know anything about pharma.
Yeah,
I'm not going to take the time to learn. To me, that isn't an amazing chart. But I'm a trader. I do have a friend, Miles McNulty, who is, I think he's still holding. I assume so. He posted about it the other day. I know he's done a lot of research into this, and he really likes it. So check out his Twitter posts. But yeah, me personally, I've got no view on this stock. It's not one I would buy, at least until it looks like a stage 2 uptrend. And even then, I don't understand the business model.
Okay, well, I know Miles as well. He's a terrific guy, brilliant analyst, and he's been following this for about 4 or 5 years. So I defer to his expertise. Okay, got a question from Nigel Symes. Are you, Michael, using AI for your research and trading at all? I presume that's ChatGPT.
Not yet, but I am working on building something that will summarize a lot of information very quickly. I need to bump out the priorities list because I think there's an opportunity for people like us who are just doing it by themselves to get an edge over everyone else by using AI to systemize things, make it quicker. It's very good if you give it lots of information and you tell it what you want. It will give you that information quite quickly. So obviously on SharePad, I've got filters which will highlight specific words and colorize them. But if you can build something where you feed it information and it tells you exactly what you need to know, then that's pretty quick. So I would strongly recommend playing around with it, seeing what comes out.
And are you gonna make that's when it's available there, Michael? Are you gonna use that sort of that trading system available to other investors, or is it going to be proprietary to you, Mr. T?
I'll probably keep it to myself. I mean, if it gives me an edge and I share it with everyone, then I've no longer get an edge. I mean, I do share a lot of free information, but at the end of the day, we're all here to, prioritize ourselves first. It's just the reality.
Okay.
But I mean, I might share some information on it, but I need to build it first.
Okay. All right, cool. Now on that same software theme, just moving on, we've got Intercede, which basically does two-factor authentication in the cybersecurity sector. So just if you're an employee of a big sort of like, US firm or UK firm, and you want to make sure that it's that person who's logging onto your system and not downloading a shed load of confidential information from your network, then the Intercede supply that software that validate that person, etc. Do you want to take us through this one, because they've just won some really big clients again out in the States, haven't they? They haven't said who it is, but it must be probably the security forces or the US DoD.
Well, and if you look at the client sheet for this business, it's super impressive. They're working with various governments, various US governmental agencies, and the margins here are ridiculous. I think it's like 99% gross margin or something. So
Yeah.
whenever they win a contract, once those costs are covered, it's pretty much just pure profit. The business, it's one I've followed for quite some time. It used to struggle to win revenue, and that was its main issue. We're 5 years into a turnaround now, and now they are starting to win business, which is reflected in that upward trend there that you can see. Because now they're actively winning contracts, driving revenue. They've just signed an agreement with some company beginning with a C, which sounded quite impressive. But to me, that trend is really nice, because if you look, and the shares are quite illiquid, so it's not one I would advise to. I wouldn't advise anyone to do anything because I'm not an advisor. But it's quite illiquid, so if there is a profit warning or something, it will be a hard hit, and also it's quite a rich valuation. But the share price doesn't really give much back, so that tells me that there's a lot of underlying demand for when the stock falls. So I hold a position in this. I think this has a lot of potential, even though it's risen quite a lot, because I think the market cap is only 70 million.
Yeah.
Especially if they can beat those forecasts, then there could be more to come. But yeah, I definitely wouldn't bet against this chart. It's an uptrend, shallow dips. There's a lot to like.
Yeah, and also I think strategically wise, it's got a really strong point solution in cybersecurity. It's been sold, I think, mostly by partners out in the US. So it's your big IT integrators and your cybersecurity platform developers, etc. Now, this could be a bit of a Trojan horse for a lot of bigger cybersecurity and a drop in the ocean. And I think that if somebody bought them, they just plug it into their sort of end-to-end cybersecurity network and have those sort of blue chip customers on board. So I actually think there's a lot of hidden strategic value in this business, actually, because I think it'd be worth a shed load more in terms of cost and certainly sales synergies to somebody else.
Yeah, another thing, the profits convert to cash as well, which is always a positive. So it's no good making a lot of profit if it doesn't convert into cash, because that's the reality, isn't it? It's the lifeblood of the business. But yeah, I agree. Strong cash generator and I can only see cybersecurity getting bigger and bigger.
Yeah, no, I'm with you. Okay, we just got a quick follow up from Nigel Batty Seams. Michael, he's asking, do you have a sweet spot in terms of the sort of market cap of a company with regards to sort of liquidity in terms of when you trade and getting in and out? Is there a lower level that you tend not to get into because of the liquidity?
So for swing trades, I'm looking at anything below 250 million. But I mean, if it's 10 million, it's probably unlikely I'm going to trade it, because the liquidity is poor. And the spread is really wide. So you'd have to have quite a high stop loss anyway to account for the spread, which reduces your position size. And yeah, if you're going to move the price when you go in, you're going to move it when you get out. So probably 20 million plus, although I will look at lower, but it would have to be something quite interesting for me to take a position.
Yeah. Okay, good. Another one you quite like is Water Intelligence, which is a minimally invasive leak detection franchise out in the States. Also owns some of its own local businesses as well in States, and is helping UK a lot of the water utilities, which is quite topical, to clean up storm water sewage spills in rivers and the sea, etc. So with the AMP8 and with Labour coming in calling for a lot of extra investment by the water companies into this area, I suspect it's doing quite well. It did a nice little tuck-in acquisition actually in Ireland this week. I don't know what your latest thoughts are for this business, because it seems now to have bottomed on the market, on the trend, and moving up.
Well, I think you probably know more about this business than me, Paul, but as a chart, yeah, it's one I've noticed that it seems to have bounced off the lows And if you look at a lot of charts in October last year, it seems to have been the lows for quite a lot of charts.
Yeah.
So it's now looking like it's consolidating. I would like to see it tighten up around this point of resistance. But yeah, for me, it could be a move to move trade, or it could be a trade to hold. It might be one that I hold for a longer period. I've not looked too much into it yet, so I need to do that. But from a technical perspective, I think this looks quite interesting.
Yeah. Yeah, I think the sort of secular demand is, you just look at climate change and water preservation. And so this company saves sort of like, a lot of households and the country's water because it doesn't just go down your drain. Similarly saves a shed load of money for insurance companies if you stop damage into houses where you do have leaks. And just as importantly, if it stops sewage coming out of sort of like drainage systems and spilling into rivers and the sea, then it's going to help sort of like anybody who wants to go sailing or swimming in the water. So it's
well, that's a positive, yeah.
you'd certainly think it's in the right spot. Okay, another one you quite
Mhm.
like is Supreme, isn't it? Which is basically the FMCG products business that has
Yeah.
just done an acquisition of Clearly Drinks. It does vaping, lighting, batteries, sports nutrition, and they just added the soft drink side of it. And it came out with its full year numbers, which are just absolutely a blockbuster. They sort of, I think the sales are up about 40%. EBITDA doubled. We've got plenty of cash. What's your latest on this? Because the trend really does look strong here, and the fundamentals. In fact, I was just looking at the numbers, and it still only trades at about 9 times PE.
Yeah, I really like this business. I mean, that chart, it's been in a stage one for quite some time, but it looks like an early stage two uptrend now.
Mm,
Um, yeah, the earnings and cash generation for this are quite impressive. A lot of people tend to get on the high horse about this and say, they don't like vaping. But then what about tobacco? What about gambling? What about drinking? Are they similarly averse to pubs? I mean, everyone can and should make their own decisions. Um, but you can also say that about defense. There's
yeah.
some defense companies which sell bombs who get dropped on people, which,
Mm,
they don't really have a choice about that. But this business isn't just about vaping. Most of the profits do come from vaping. Um, but it's not just a vaping company. They're Clearly Drinks. I think there's potential there.
yeah.
On the paper, I think it looks like they've overpaid, but the CEO seems quite switched on. And really, it's a bet on him.
I don't think they've overpaid. They only paid 5 times EBITDA, and if you look at Nichols and AG Bar, they trade at about 12,
Mm.
13 times EBITDA. And I know they're more straight branded, as a Binks, but I don't think 5 times EBITDA's. It's going to be earnings
Yeah.
accretive immediately.
Well, yeah, I would trust him. Yeah, I guess when you put it in that perspective, yes, it sounds about right.
Yeah. Okay, good. We've got a bit of another turnaround. We've got in the similar sort of sector, we've got Science in Sport, which basically does these sort of like performance gels, which go to Ineos Grenadiers, the ex-Sky cycling
Mm.
team, but also go to Tottenham Hotspur and to other Nice Football Club, I think. So they do these performance products. What's sort of your latest on this one? They've just done a fundraise, haven't they? At
Yeah.
about, is it 17p? I guess
Mm.
the question is they were a bit of a darling during the pandemic lockdown when everybody was sort of cycling, etc. But they're sort of come down, but they do seem to have sort of bottomed. And if they've got a growth strategy,
So this one's quite interesting because there's a turnaround, and so someone found that the old CEO was actually on a bike ride on the, the day of the AGM. I don't know if that's. I mean, you could see his Strava profile, and you could see him cycling around Regent's Park or something
wow.
on the day of the AGM, which is quite funny. But he's now gone, along with his ridiculous salary.
Mm,
And if you look at the stock price chart, you can only really say he's been rewarded for failure because ultimately the share price chart is what you were judged on.
yeah.
Um, but yeah, there's a new guy. Dan Wright, who went into Acrol a few years ago, put his own money into Acrol, turned that around. It did get bought out, and management recommended it, which I thought was a bit of a shame. But what they were saying is they need to expand in order to drive more earnings and acquisitions. They didn't think that there was enough support for them in the market, which is fair enough. This business, it's like cycling products and sports nutrition. I was offered the placing, turned it down because it doesn't really trade that much, and I didn't want to be stuck into something that might take some time to turn around. If you look at the forecast, I think they only benefited in the third year. So that's quite some time. You sort of have to hope that they'd beat, which is possible. But yeah, so they've cut a lot of costs, a lot of product lines that were driving a lot of revenue but low margin. They've got rid of and sacked off. So they're looking to improve the gross margin there on lower revenues and lower costs. So it seems quite a credible plan. I mean, I've not looked. That's probably the extent of my detail in that. But if you look at the chart, it's starting to look like a stage 2 stock. I mean, what are your thoughts on this, Paul?
I was just going to ask you: have you actually have you tried the products out? I've never actually tried a gel. I don't cycle, I suppose. But
I think they're quite popular. I've never used them myself. I used to use My Protein quite a bit.
Yeah,
from the Mpac Group because it was the cheapest, and Science and Sport just seemed ridiculously overpriced. But I use Huel now, so I don't even use My Protein anymore.
Yeah.
But yeah, in terms of product, I had no idea. And what really matters is the numbers. I mean, obviously, if it's a poor product, I'm just not the person to decide if it is.
Yeah, I struggle with consumer stocks, and such. Not as I like investing in them, but I'm rubbish at consumer stocks. So my history hasn't been great in this area. So
Oh dear.
as an investor, I try and avoid them because I'm not something which will really think, oh, I think this is fab. Everybody, the actual rest of the consumers just hate it, and it's an area that I'm not very good. I tend to stick for B2B stocks, but I could see it's definitely a turnaround. It's got a good name in the industry, and if he's a decent management team, which sounds as though it's the case, he's turned around Acrol then and sold it, then I think this is it's got some legs, no doubt about it. Okay, good. Another one which has gone through a bit of a turnaround is Frontier Developments, which is sort of the gaming business. I know you quite got your eye on. What's your latest on this one? Because the whole sector has been blasted, hasn't it, recently? But has now started to sort of like turn as people realise there is going to be life after, so after the pandemic lockdowns have ended.
Yeah, this one, I think there's been no new shares issued, and it looked like a fundraiser was on the cards, but the cash position has improved, and I think that's no longer the case, which has been reflected in the share price. They have tried to diversify. It hasn't worked. So now they're focusing on the type of games that they've been successful in. So Roller Coaster Tycoon, there's a couple of other games. Is it Jurassic Park? And I think they have F1 Manager as well. So they're now focusing on those type of games which have been successful for them. Obviously, it's a big risk. If there's a flop, then it's not like they're producing a game every month, right? So if they produce a game and it flops, that's quite a big risk. So if you were going to invest in this, you would have to hope that they know what they're doing, and you'd have to hope that the game is successful. For me, I'm looking around that 300 mark. It's a big round number, and there's also resistance there. It did gap up recently and get heavily sold into. So right now it's testing the 50 exponential. I think you've got that on the simple, the SMA. So if you look on the chart, it's hovering just above the 50 exponential moving average. So that could be support. But yeah, I'm interested in that break of the 300.
Good. Okay. In the similar, well, another sector that's been hit but started to come back is Brave Bison, which basically does marketing services and advertising. I think it's sort of like more of an endorser platform for corporates who can use to obviously sell their products in the new social media world. And it put a bid in which was rejected by Mission Group, another marketing company just recently. I think it walked away. Lots of cash on the balance sheet. What's your latest on this one? Still not actually very expensive, trading at about less than 11 times PE.
Yeah, I mean the brothers who came into this business have turned it around, and for the first time in its listed history, it's looking quite attractive. They've put a lot of money into the business, significant amount, and so far they're doing what they said they would do, which is buy businesses, quite attractive prices, integrate them, and grow the business as a whole.
Yeah.
I'll confess I don't entirely know what it does. It does like digital services
Yeah.
and stuff with influencers. That's pretty much the extent of what I know. But again, that 3p level is looking like resistance. The numbers look quite attractive. And yeah, really, it's a bet on them. I mean, they've certainly put the money where the mouth is.
Yeah, no, it's cheap, no doubt about it, with good good cash on the balance sheet. And I guess the key question is the differentiation. It's a very, very competitive area, the whole advertising and services and digital and endorsers and all this sort of stuff. So it's a pretty brutal area, but they seem to be doing pretty well. So why not? Okay.
Well, they've bought a couple of businesses. They've bedded them in. So the execution risk on the next deal is, I think, quite reduced because they've proven they can do it and it works. So I guess it's just a case of seeing what comes next.
Yeah. Just a reminder to anybody, if they want to ask questions to Michael, then please just put them into the chat bot. Then I'll read them out. We've got one which actually has been a rocket ship, hasn't it? Of just like Filtronic, which does sort of like pretty much unique wireless communication hardware and software. Traditionally out of the telco sector with wireless, but does industrials with the aerospace and defense, etc. And then has just recently won a really sort of like massive contract with Starlink, which is the subsidiary of Elon Musk SpaceX business. And these guys are doing low orbit satellite communications, which has got thousands and thousands of sort of like the satellites which go around the world, but they're doing the ground stations with the potential to do the actual satellites. Give us your view on this one, because it's just taken off, to try the pun. And I guess the question to investors is when do you take profits on this one, and do you run it?
That's an impossible question, because
I like to ask easy ones, Michael.
It'll go higher. But if it don't sell, it might go down. So who knows? But I've got a position in this. Yeah, that uptrend is just fantastic, isn't it? It's beaten expectations. I think the valuation is quite rich at the moment. But the problem is the best stocks on the market always will trade at high valuations, because they're great stocks, or the market believes them to be great stocks, and either they keep on beating, or they keep making progress. I think this is quite exciting, and I think it's about 150 million market cap.
Yeah, that's right.
But there's no reason why it can't go higher if they keep turning around, which certainly have done so far. I think SpaceX is a huge endorsement of this business, and they've also got warrants to convert to 10% of Filtronic's market cap, I believe. So maybe SpaceX like it so much they buy it out. Obviously, that is speculation on my part. But if it becomes a key part of their business model, then it might make sense to just buy it.
Yeah, no, I would agree. And also, I spoke to one of the fund managers recently who also owns it, Richard Staveley, who's Rockwood Strategic, and he talked about it, who owns it, and he's going to hold it as like run the winners, because this one has got so much potential. I mean, I mean, you can't use it as an analogy, but when you look at Nvidia, it looked expensive at about $100, as like, and then it went to it went effectively equivalent before it split. It's 1,200 in about 2 years. So, you know, you don't want to, even if you made a lot of money, you got to carry on if there's a good sort of like secular tailwind behind it. Okay, good.
And
okay,
it's
good.
a big market, right? Isn't it?
Yeah,
So,
it is absolutely.
you know,
Yeah.
space, it's potentially infinite.
Yeah, no, you're right. Okay, good. We've got another turnaround. We've got Cavendish Financial, which is the old Senkos and what was it, FinCap business that which came together.
Yeah.
I think they put out their first sort of trading up. But what's your latest on this one? Because at some point, I guess, if the IPO market in the UK does return, then these guys are just well geared for that upside.
That's pretty much my view. Yeah, it's a proxy for UK small caps, isn't it? So Senkos and FinCap, instead of competing,
Yeah,
they've merged, stripped out a lot of the costs. I think they had 7 million of annualized savings.
yeah,
So if we are in an early stage bull market, which I believe we are, you know, deal flow is picking up. We had Raspberry Pi recently. I think there was another IPO yesterday.
yeah. There
So
was.
if the primary and the secondary market picks up, this company could do pretty well. And I've got a small position in it. It's quite liquid. Um, but yeah, it's basically a bet on UK small caps. So that's really the amount of research I've done. As I say, I'm not a financials person. I'm just looking at trends. Is there a reason for that trend? Does it make sense? And then looking at risk to reward. Personally, I think the risk to reward is quite attractive here, but you know, who knows?
And just in terms of broader on that UK small caps, then you're obviously quite positive, aren't you? I mean, I know the valuation, they've underperformed for ages and they've got a lot of mean reversion and catch up. And if interest rates come down, they should be a big beneficiary. How come you decided to sort of like specifically sort of like, you know, target small caps?
I mean, this is what I've been doing since I started trading. It's UK small caps. I
Yeah.
do intraday trade stocks as well. But my biggest winners have often come from, you know, 3 to 6 month long trades,
Yeah.
where I've averaged up repeatedly into an uptrend. And so, yeah, that's why. I mean, I'm quite positive on them. I think there's a lot of reasons to be.
Yeah.
But as I say, that could change tomorrow. So you never really know, do you?
Yeah, no, true. Okay, we've got a question from Paul L. He basically says, any views on Capita following the recent disposal announcement, which I think was about 200 million. It was a software business, if I remember it, that they sold for about 10 times EBITDA. Don't know if you've got any thoughts on this one, because again, it's a sort of like one of those perennial losers, and has it reached a bottom and it's starting to turn? I don't know if you had to look at this one.
Yes, I looked at the news the other day and I didn't think it was that impressive, but obviously I was wrong because the price
Yeah.
shot up. So, you know, but I haven't looked at it in detail, so I can't offer an opinion on something I have no idea about, I'm afraid.
Yeah, I mean, I know a bit about it. I mean, it's basically a perennial underperformer, but the management team
Yeah.
seem to be doing a good job, and basically have been for some time selling off non-core assets. That 200 million should solidify the balance sheet. I think they still have negative net tangible assets. I'd have to really check it. So they haven't got a huge balance sheet support, but clearly they've got a, you know, decent reputation with a lot of their corporates and public sector customers. And the key is that if they can actually, you know, sort of like get that sort of recurring revenue streams from a lot of those businesses, sort of like, you know, increasing and not churning off, then the shares will look very, very undervalued. And I know, again, Richard Staveley of Rockwood Strategic likes this, and he thinks it's a bit of a blind spot in the market for investors. So yeah, I'd say, you know, say to people, have a good look at it as a potential idea, because the 200 million is a very, very good price actually for that business. And if it sort of like takes off all the risk of potential having to do a placing future date, which I think it probably does, then you'd say the stock is only going to go one way. But I'm not owning it, and I don't know it in, you know, in sort of like massive detail. But yeah, no, good question that Paul L. Okay,
Just to add to that,
yeah,
sorry, quickly.
sure, please.
You know, a lot of my trades, the best performing ones have been when sentiment has been at rock bottom. The financials are not great, but they're improving. and then the stock price is starting to uptrend. So this is about 50% off its lows, it looks like. So there's potential green shoots for an uptrend. If it's hated and disliked, which is what Mr. Staveley seems to think, and he seems quite a smart guy, then it could be worth a look, because often you get not only you get the revaluation in terms of the market ascribing a high valuation to the stock, but also you get the earnings growth as well, which can provide a nice boost. So that is really where my best trades have come from things that I hated but are improving, and the trend is also improving, but they've not really been found out by the market.
Yeah, I agree. Okay, good. We've got one question which came up last night. It was on Mpac, which is basically high-speed packaging automation solutions business. What do you think of the chart here, Michael? Because they fundamentally wise, they traded still about 13 times PE, even after the shares have done well. And they're basically knocking the ball out into the park in terms of revenues, up through about 15% like for like. And the profits would have been up a lot more in the first half. It hadn't been there. They've got this fledgling clean energy, which is EV battery packaging automation division.
Nice sector.
It is, that they're basically subsidising because obviously, at the moment when they've just really launched that in the last 2 or 3 years, it's lower margins than the rest of the sort of more mature business, but that will sort of come through learning curve efficiencies going forward and economies of scale. I don't know what your latest view on this one is, because or if you've got any thoughts on this one. There's a very good balance sheet, and sales, profit margins, and cash seem to be going up.
I haven't looked at it fundamentally, but technically that is a very nice chart. If you look from the high, there's not really giving much back, which means there's either not that many sellers or there's plenty of buyers to overpower those sellers, which is definitely a positive. Charts, I think they do tell you everything you need to know. You could trade profitably only looking at charts, because it basically puts all of the market sentiment and everyone's fair value calculations into one picture. So it makes it quite easy to see if something is on the rise or on the down. And this looks like it's on the rise. It's more than 100%, 150% off the lows. Definitely an uptrend. It's above the 200 moving averages, which are pointing upwards. So technically, this would pass my green light. Fundamentally, I've got no idea because I've not looked at it. But for a technical trade, I can see the attraction.
Actually, one of your sort of like colleagues in this sort of the investing trading world, Richard Crowe, is also an influential and well-respected sort of investor. He owns this and likes it.
Okay, right.
He really, the management team is great. So he's on board. Okay, good. Thanks very much, Michael. But before we go, I've got one question. Given you are in Germany, who's going to win, and what's the score on Sunday at 8 o'clock against Spain?
Well, obviously, I'd like England to win, but objectively, I don't think they will. But who knows? Spain have got a good team. Although the first 45 minutes against the Netherlands, I thought England were brilliant. But the Netherlands were really strong in the second half. They sort of stifled England, and they could have easily have scored. So you need a bit of luck in every business. They've got a good squad. Let's hope they win.
Yeah, well, they've probably got that. Yeah, they've probably got their hands full with Spain, no doubt about it. The champions, but sometimes us Brits, we quite like going in as underdogs, and
it's the best way to be. No pressure.
But anyway, I hope you have a great time in Germany with a few sort of like good,
thanks a lot, Paul.
A few good German bits. So anyway, thanks a lot, everybody, and look forward. We'll look forward to touching base against Michael in a few months' time. So thanks again.
Yeah, thanks for having me on, Paul, and thanks everyone for tuning in. I appreciate it. Thank you.